Morning, everybody. Live here with Fractal Effects. Please make sure you read the disclosure, the disclaimer. Also, if you're following along today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Let's jump onto the charts. Let's move the NAS to the left. The 5-minute. We got ES on the right. Currently no confirmation. We have an upside expansion model. London gave us a bullish confirmation. We had a small pullback close to the EMAs, and then an extension. New York, we have our fair value gap of interest. We are below it. We are still above the 238 EMA. And on the TDI, we are above the stationary 50 and a little bit below the liquid 50. Now we want to see what happens here. If we reject from this fair value gap, or if we get over it and reject from the other side of the consequence encroachment to the upside. Still waiting for confirmation. Next candle slowly coming in. ES is actually sitting inside the fair value gap now, rejecting off of it. NAS is below it, right at the midpoint. See what happens here. It's bouncing off the 50 EMA on the 5-minute. Sorry, one of these is in a 15-minute. Let's bring that down to 5 as well. Also bouncing off the 50. We are bullish currently. So we do have an overall daily bias. We're hoping to get a bullish confirmation and continue to the upside. Still just patiently waiting. Once again, slowly making our way back to that fair value gap. So we're stuck between two EMAs. This thing could push down. It could push up from here. Even though we have a overall daily bias, we want to wait for all the confluence to be there. We do not jump in haphazardly. Just stuck at that fair value gap, but to the bottom. So we're above the 238 EMA, which is still bearish. Bullish. We're bouncing off the 50, also a bullish sign, below the 20. We have not had another crossover yet, so this is most likely just gesticulating here before pushing up. Another reason we wait for confirmation is you don't know how many wicks, how many times it's just going to wick this area. Clearly it wants to push up from here, but again, you have this fair value gap. It could just push down further, keep doing that, maybe sweep this liquidity down here. It's a good sign right there. Let's see if we're able to get over. Taking another drawdown. Just stuck between those two PD arrays, between the fair value gap and the 50 EMA. We're just patiently waiting. Another push down. Taking out some more liquidity. The market uses pivot points like this to generate more liquidity. There are people going in for sells from this fair value gap. There are people going in for buys off the bounce of this 50 EMA. They're engineering new liquidity. Our bias is still bullish until we get a bearish confirmation. And even then, since we have a upside expansion model, we'd want to see all the telltale signs there, all the points of confluence to let us know that this actually does want to push down. Until we see that, our overall bias will remain bullish. We'll wait for it to break this, give us a bullish confirmation, retrace back into our zone, and then extend. A lot of gesticulation happening here, consolidation. Just their way of engineering new liquidity. We usually don't like to see that. It's a lot of consolidation there from the open. Now there's a lot of consolidation down here. We want to see clean moves. So there's a lot of manipulation happening today. That's why I wouldn't be surprised if they just drop this as well. That's why we wait. Right now our box is red. So the session sentiment is bearish. Again, a lot of gesticulation happening, but still looks like it wants to drive up past this fair value gap. Just having a tough time. And again, anytime you see this, people think it's buying, selling pressure. No, they're just engineering new liquidity. They want you to think that this could go in either direction. So they're building buy orders and sell orders. You want to make sure you're looking at it on all different time frames, whichever asset that you're concentrating and trading. We have ES on the right here, and NAS. Still just waiting for confirmation. (10:43) Eastern Standard Time. We'd like to get a confirmation a little after 11 with an immediate retracement. Now pushing up. We're now well above. We'll most likely get that bullish confirmation. Remember, you want to work with the entire narrative. You have an upside expansion model. Asia going into London, London going into New York. New York usually does a false move and then follows in suit. Overall daily sentiment is bullish. Our first target, even though the market is actually relatively close to it, is 18,452. $18,452. That's our first target. Now again, the range itself has expanded well into that zone. Second target is 18,491. Still patiently waiting for that confirmation. Where the market hates straight lines. It wants to sweep this. What do we mean by sweep? We want to see a candle close, not just a candle wick. We want to see it forcefully take that liquidity and displace. We want to see displacement candles. Right now we have a fair value gap right here with the 20 EMA below. We could get confirmation, retracement back into this zone, and an extension. Again, just patiently waiting. As mentioned before, if trading feels like you're watching paint dry, then you're doing it right. You don't want to be sitting there biting your nails and getting FOMO. For all we know, this could just turn back around. Or it could candle wick, not give us a confirmation. Remember, we only get a confirmation once we get a candle body close above our range, which is that gray line right there. The range encompasses both the wicks and the bodies. The dotted lines represent the bodies. The line up here represents the wicks. 4 seconds left of this candle close. Got another fair value gap forming, which makes this a breakaway gap, another sign that we are bullish and pushing. And we're just patiently waiting. where we are live Tuesday, Wednesdays, and Thursdays from 10:30 to roughly about 11:30 if we're not in a trade. If we are, we will most likely push it till noon. Our goal is to be out of the markets by noon. That's it. 1.5 hours. Market still pushing. Just gesticulating at the top. We will most likely get that confirmation now soon, off this next candle, hopefully. And we're watching NAS on the left, ES on the right. We use both these markets as they are usually congruent, so any kind of deviation that we see in one will kind of help us formulate a bias for the other. Right now NAS is the stronger one, closer to the top, but they're pretty neck and neck. A lot of consolidation. Not much news today. We have an orange folder around 1 o'clock, which should not affect us at all. The 10-year bond auction. On the 1 minute, We are hitting that 20 EMA again and bouncing off of it. Just patiently waiting for confirmation. Still extremely bullish. Closing in on 11 o'clock Eastern Standard. We should be getting ready to push here. Remember, we use the indicator in conjunction with our aggregate back on the back end of our dashboard. 20 years of aggregate that help you actually maneuver the markets. Essentially a translator of what's happening during each session. Again, still extremely bullish. Just waiting. Should be getting a push. Just gesticulating right there. Still waiting for a bullish confirmation. Just waiting. We want to see it push through. Push through this white line and then past the gray. Very, very slow today. Keep in mind the probability is low, but there are days where I get stuck in a range and we never get a confirmation to either side. That's why we have that 1 hour rule. If you're not in a trade within the first hour of this range forming, you're done for the day. No point in waiting around for 3 extra hours just to see it not break either side. Same thing with that noon, the noon rule. Another algorithm takes over the market at noon. It's very chaotic. You're better off trading after lunchtime New York, so 1:30 New York time, Eastern Standard. We're seeing a lot of gesticulation here specifically because of the fact that we're also in the Fibonacci golden zone. Again, another place where they engineer new liquidity. There are people that use Fibonacci exclusively, and they want to see rejection, rejection. They want to push down from here. But it's got to fall in suit with the overall narrative. The narrative right now is bullish. Even if we got a bearish confirmation this late in the game, we would not be interested. Remember, we're probability traders. We want to make sure we see at least a 70% probability that our trade is accurate. Anything lower than that is gambling. People will tell you 50-50. That's gambling. No. Anything lower than 70% is gambling. Still waiting for that confirmation. We got time. This is a good sign. We're seeing some wicks happening on the 5-minute. Push is most likely coming. Still having a tough time getting past that. Again, they're just engineering new liquidity. Still sitting in that golden fib zone. Let's hope we get that confirmation. We have no confirmation by 11:30, and we're going to be most likely concluding this session. It's close, it wants to. We've already decided we're bullish. Now there are people that go in on trades, for example, off this 20 EMA when they see this rejection. There are people that go in when they see this 50. But again, we're waiting for that confirmation. We have our zones. And again, if one candle shoots out, as mentioned before, these zones are pretty tight. It takes off without us, it takes off without us. That's okay. Remember, day trading is not every day trading. We wait for the market to come to us. We're not chasing this market. Think about everybody who got in here. Sure, they're in profit. They're the ones waiting, hoping even harder for this thing to push through. What about the people that got in here? They're biting their nails. We want a conclusive close and a conclusive confirmation to the upside. Just a whole bunch of gesticulation. Nothing better on ES. Exactly the same, but it's bouncing off of the fair value gap. So ES might actually give us the push first. Confirmation. Looks like we're close to that confirmation, but still waiting. Still patiently waiting. 11:09 right now. And you can expect days like this when there's no news. News is used as a smokescreen to reprice the market. Without that smokescreen, you get a lot slower moves. Doesn't mean that the market doesn't leave telltale signs, it's just we have to be a little bit more cautious. We have to wait for all the confluence, wait for the confirmation. See, here we go. Another drawback. Hitting the 20, aiming for the fair value gap. We are seeing rejection off the 20 again. All telltale signs that this thing wants to push up. There's a lot of retail traders that look at this and see resistance. So they're going in short. It's not resistance. Again, that's just engineering new liquidity, creating buy-sell orders on both sides. Taking another swipe down. As mentioned before, there's traders, retail traders that win for a buy right here. Most of them might have even gotten their stops hit. Deeper pullback this time. Yes, excuse me, ES still at that 20 EMA. And the fair value gap. Now keep in mind our indicator paints out all the important fair value gaps you need to know about. It paints out all the small ones as well. You can see little red and green blocks here, just to let you know visually where they are. But those are not the areas of interest. The areas of interest are the big ones that you see. That, the EMAs, that's our zone. Excuse me. Still bouncing now off that 20 EMA. Approaching 11:15. Getting some rejection there at the fair value gap now. Still just patiently waiting. Hoping to get that confirmation. See how close we were to the confirmation? And then it just pulled back. We wait until we get that confirmation. If we don't get it, that's okay. You did not waste your whole day. Now we're getting that deeper retracement. Let's see what happens when it hits the 50. We are in New York's fair value gap. Another telltale sign, this is an algorithm. That's why it's focused around this primary fair value gap. We call them session gaps. So each one has a session gap. At least you want to see one on each one. If there is no fair value gap, it's just a consolidating session. But there's London's right below us. We can see it. These aqua lines, as mentioned before, are painted out during Tuesday's range. And that's a range that we will see the market most likely retrace back into tomorrow, or at least head in that direction. Again, getting a deeper retracement. Bouncing off the 50, still in that fair value gap. Another telltale sign, once we get rejection off this, that this wants to actually push up. But again, patiently waiting. A lot of traders that are going in right here after they see wicks off the 50, right from the fair value gap. But for all we know, it could push right through this. The fact that it is not broken this and it is literally rejected off of it that many times, there's not a doubt in my mind that it wants to break this. When it wants to break this, though, that's another question. Because it could just keep dropping, sweep this liquidity, then come up. That's why we wait for confirmation. You don't want to be in a trade here, have it sweep you, right? Because your stop loss would be down here if you jump in here. So it would sweep you, then take out the tops here. Maybe even hit the 238 EMA. We are still seeing some gesticulation and rejection happening here. We're closing in on 11:30. Still seeing a lot of rejection happening at key points. 50 EMA, New York fair value gap, and even in the golden zone now that we flipped this fib from top to bottom. Now this has become the golden zone, so we're right at 61%. Again, there are traders that will go long here. We are looking for the safest possible entry, the highest probability. And the highest probability, according to the aggregate we have on the dashboard, 20 years of aggregate, highest probability happens once this range is broken. Sure, you can get in early. Somebody could have got in here and just wrote it here. Somebody could have got in here, wrote it down. Highest probability. We are probability traders. We are not gamblers. That's how you turn this into a profession. Our job is to make you as proficient as possible. Sure, you can trade with us on Tuesday, Wednesdays, and Thursdays, but what about Mondays, Fridays? Some people love to trade crypto on Saturdays. Crypto's trading 24 hours a day. Same strategy. As a matter of fact, Saturday mornings for crypto, for Bitcoin, BTC, that's the ticker, BTC USD. It's actually a good trade. It's funny because the market is closed, but so you'd think there would be no New York session specifically, but the time frames, the psychology, people are still trading at the exact same time on Saturdays. So it works. Still getting a lot of gesticulation happening. 1 minute left till this candle close. Six minutes left till 11:30. We might give this trade a little bit more time just because we are sitting in very key zones that are actually sticking with our overall daily sentiment, which is bullish. Now we're pushing past that key zone. Still in the golden zone of the Fibonacci, but we are now on the other side of that 50 EMA. Let's see if this candle rejects. On the other side of the New York fair value gap. And again, this is not a coincidence. Creating buy and sell orders right now. Engineering new liquidity. As mentioned before, if we get a bearish confirmation this late in the game, we will most likely conclude the session. Then today they just wanted to create a range to sweep liquidity on both sides. That was their entire plan. By they, I mean the market makers. ES still above the 50 EMA, but trapped between the 20 and the 50 and below the opening gap, fair value gap. Right now we're wicking. NAS is wicking in the golden zone. Until we get a confirmation. Still just gesticulating right there in the golden zone. Clearly everything is still bullish. Just one of those slow days without any news drivers. But again, those are days when they feel like manipulating it the most. It could just drop. And the second we get a bearish confirmation, our probability drops. Drops below 70, and that's why we're not interested. Sometimes the best trades are the ones you didn't get into because the market went against you. Now we're getting a push from the golden zone off the 50 back into the New York fair value gap. We got about 45 seconds left on this candle close. And since all the signs are still bullish, we'll give it another 30 minutes going into noon. Let's see if something actually breaks this zone. The key is to stay patient. Our goal was to be in a trade within 1 hour of the range formation, but we have no confirmation. This is usually the place where, again, people, if they have things to do, perhaps take off to work. This would be the best time to do it. Getting some movement now off that key zone. Remember, when we see this, this also indicates no volume. Look at the TDI. Flat, flat, flat. Now we get volume, there's no point in jumping in. That's another reason we wait for confirmation. As soon as it confirms, that's kind of like the dealer revealing his hand, right? We know it wants to push up. Volume will most likely flood in. Orders will flood in. But right now, everything is flat, consolidating. And even though we have a bullish bias, and even though we're at a key zone, this is not high probability, or not high enough probability, I should say. Again, just stuck there, wicking on both sides of the fair value gap. Remember, this strategy is not just about giving you the highest probability of entering a trade, but also protecting you from not jumping into trades. Until this range is broken, we're not interested. We're already past 11:30. And because there's no news drivers today, this might move slow if it breaks the range at all. If it's one of those days where it doesn't break the range, it's actually a very low probability that it won't break the range today. Literally, I believe 6% chance that it will not break the range today. So maybe it's one of those 6% days. That's the beauty of the Fractal Effects method. We can literally see what it's done over the last 20 years. And over the last 20 years, only 6% of the time did it not break the New York range. Now we're actually getting a bounce off the 20 to the other side, just engineering more liquidity. ES bouncing off the 50, but trapped between the 2050 and the opening gap. Again, just one of those days. No volume, TDI flat. But we are still bullish. Sentiment is still bullish. Still on the other side of that fair value gap, off the consequence encroachment. Still in the golden zone. Remember guys, this is all math. If you're not good at math, that's okay too. Because as mentioned before on Fractal Effects, we literally break it down for you. It's all visuals. You see graphs. I let you know exactly when we should expect confirmation. We are past that, so that falls into one of those 6% days most likely, or into one of those days where we get late confirmation, which is going to push us into noon, which means we're not interested anyways, since that other algorithm takes over. Getting that push now. Slowly pushing up now. Struggling against the 20 EMA. Again, all signs are bullish. Just no volume. As mentioned before, there's a lot of traders going in right here. Golden zone, 50 EMA, New York gap. You're also up against the 20. You're also at the midpoint, the consequence encroachment of that fair value gap. You're also on a day where we have no volume. This this could easily just blow out the bottom right here, sweep the liquidity, and then push up. And the market's only doing one of two things. It's either going to sweep liquidity or it's going to fill in inefficiencies, and usually in that order. So we've yet to actually sweep any liquidity, but we have filled in an inefficiency, this fair value gap. So now it has to sweep liquidity now. Could it be this liquidity or this liquidity? That's what we're waiting to see. But it has to do that. Another telltale sign of the algorithm. And keep in mind, this is an elegant algorithm. It's not only psychology, it's reverse psychology. It knows exactly what you want it to do. As I mentioned, there's people going in for buys right here. This wick right here just scared the hell out of them. ES still bouncing off the 50. Everything's still bullish. You also don't want to be in a trade and wait 30, 40 minutes before it pushes either, which it looks like it could be today. 5, 10, 15, 20 minutes we've been sitting in the zone. Closing in on 11:40 Eastern Standard Time. Usually we would have concluded this session, but again, we're at a very, very key zone. A lot of points of confluence here that let us know that this is going to be bullish. I'm willing to wait it out, but again, if the volume never kicks in and we actually don't break the range, there's no point. So we'll give it another 20 minutes till noon. There you go. Just took out people's stops. Pretty close to possibly giving us a bearish confirmation. We're still in the golden zone. Remember, it could bounce off 79%. But if we get a bearish confirmation, we will conclude the session. That goes against the entire overall sentiment that we have. Getting another candle wick rejection from 79%. Give it another 15 minutes. Remember, that's all it's doing right now. It's just continuing to sweep. Drop low here, 50, swept it. Came back up. Swept, swept. Now just swept this liquidity. That's why the volume is low. Still pushing down. Right to the 88. Remember, each day has a footprint. Wednesday could potentially set the low on a bullish day, or sorry, a bullish market, or it could set the high on a bearish market. So far, we've set the high for the week. It's taken out previous day's high already. Where there's a lot of people that went in for sells right here, just purely based off of rejection, based off of support and rejection. Oh, sorry, support and resistance. And sure, they made money. That's no different than a broken clock being correct 2 times a day. Looks like we're close to a bearish confirmation, which means that we will conclude the session as soon as we see a triangle here. As soon as we see this candle body close over this gray line, since it doesn't fit the overall narrative, it will most likely hit this 238, bounce, and then actually take out. There you go. 4 seconds, 3, 2, 1. Now we don't know how low this could go. And since we're already past 11:30, 15 minutes away from noon, we'll conclude this session. It will most likely go further, hit the 238, or it could retrace and then give us that sell, but it's just not fitting the overall narrative of the market. So thanks for joining us today. Remember, Fractal Effects, we're live Tuesday, Wednesdays, and Thursdays, 10:30 to roughly noon. Check us out at fractaleffects.com. Make sure you're subscribed, hit the notification so you know when we're live. Check out our back end. We have a full dashboard with aggregate. We have a full learning hub that we're continuously adding to. And we will see you tomorrow. Have a good rest of your day.